many people here in crypto don't want that or wants the contribution of banks, and I totally understand being a banker. And we are helping crypto industry from last 4 years. But before we start the panel, Bhavin, can you introduce yourself? What you're doing and what's your contribution?
So look, I'm a management consultant. Have been in the region for last 15 years, 20 years of overall experience. I typically advise financial institutions and regulators forming new regulations, new regulatory regimes, and financial institutions when they are typically looking at new regulations or trying to adapt to new products which are something like crypto, not yet regulated. So that's what my career has been about for last 15 years.
So let's start the discussion, because when it comes to the banks are always divided into two groups, right? You have the banks who like to understand crypto, the banks who totally understand that crypto is a big scam or a big Ponzi scheme, and this is something which they should not be involved. So when it comes to you, what's your experience with the banks? How, in your interactions?
Look, anything new when it comes first, right? There are always early adopters and there are always early detectors, right? And crypto is nothing but exactly going through the same journey. It's innovative, it's new, so some people are super excited and probably raising expectations way beyond its reality. And while there are others who are so scared that they are not even ready to touch. Probably reality lies somewhere in between. And I think slowly, the kind of adaptation it is taking place, having such an open forum discussion like one today, are all signs that we are coming to some convergence there, right? But banks still believe they would only touch this once they feel comfortable, and banks are heavily guarded by regulators. So we need to get regulators comfortable to it. They get comfortable, banks will get comfortable.
And how about you? What's your experience?
So, I come from a world where everyone that was in this room here right now with me didn't exist. When we started talking about this in 2014, it was blockchain what? Now, a couple of years later, it's blockchain wow, and there's thousands of people here that are interested in blockchain and crypto particularly. With any technological change, with any new opportunity, people or the existing status quo will fear this new innovation. So what we've seen throughout the past couple of years is leaders have started emerging by tapping into these new business models, right? So we see banks like Banco Santander leading the way in crypto adoption. We see banks like RBS leading the way in crypto adoption. The DTCM, which isn't necessarily a name to everyone, but they are the largest bonds issuer in the world. They do multiple $1 trillion of volume a year, and they are now running on blockchain. So, as with any new thing or technology or innovation, there will be the people who will be left behind in that innovation. And think about Kodak or Motorola or Nokia, right? These were leaders at some point. I still use a BlackBerry, right? So there's no BlackBerry anymore. The price of this phone has shot up 7 times because they just don't produce it anymore. Is that because BlackBerry didn't know what technology was? Is it because they didn't have enough market share? No, it is because they didn't embrace this new change that was coming up. Right? So similarly with banks, and in the UAE particularly, we are seeing banks that are supporting this change, and we are seeing banks who are saying, no way, we don't want anything to do with this.
So because you mentioned about UAE, and I was talking to some people here yesterday, and they said that the UAE, the banks are still not very supportive to crypto. So can you tell some of our audience which are the banks which are actually supportive of crypto in UAE?
I don't think there is one bank that came out and said hardcore, yes, we support, or no, we don't support.
Okay.
Having said that, without advertising a particular bank, there are certain banks where you can, let's say, liquidate cryptocurrency and transfer dirhams or dollar to your bank account in the UAE. And there are banks that when this transfer comes in, will block your account, right? So that is in the UAE, which is, generally speaking, a very small market. But globally speaking, I think one of the banks that needs to be called out, because they were at the forefront of this change from a banking point of view, was the Banco Santander. Banco Santander actually used this in 2015. Do you know Banco Santander? Just a show of hands. Banco Santander, is that a...
Yeah.
All right, okay. So for the ones that don't know, Banco Santander is one of the largest banks in the Eurozone, right? And they operate in multiple different jurisdictions in the Eurozone. Now, due to the fact that they operate in multiple different jurisdictions, they do oblige by multiple different legislations, right? Therefore, if Banco Santander in London wants to transfer money to Banco Santander in Madrid, they need to keep a certain multiple of that transfer always locked with the central bank of Spain, with the central bank of Britain. Now what they said, and very early on in 2000, if I'm not mistaken, it was 14 or 15. In 2014 and 15, they said, you know what, we're going to create a blockchain. An early front-runner of CBDCs for all intents and purposes. They came out and they said, okay, we are Banco Santander in London, and we are Banco Santander in Madrid, and we want to work with the regulator in Spain, and we want to work with the regulator in Britain. So rather than putting these regulator on the side and not working with the regulator, they pulled the regulator in. And they created a blockchain ecosystem between the Central Bank of the UK, the Central Bank of Spain, Banco Santander in the UK, and Banco Santander in Spain. And they said, rather than us locking up hundreds of millions of euros and pounds in this process of interbank transfer, we're going to put all of you guys on a blockchain, and we're going to unlock all of this locked capital. And within just this technology, they were able to unlock hundreds of millions of working capital. Now, can we say that this is a bank that is against blockchain? No, right?
Yeah, but we are not talking about blockchain. I think this blockchain thing was too much hyped in 2015-16, and people were calling out Bitcoin is not a crypto, but blockchain is a real innovation. But again, we are sitting in 2021, and I think that blockchain, whole wave of blockchain and blockchain around summits was gone, but Bitcoin is still here.
I
So
strongly
think
disagree with
that's
that.
what I believe.
I strongly disagree. I'll
Okay,
tell you
so
why.
yeah, please tell us.
Yeah, I'll tell you
Yeah.
why. And you know, disagreement is good. It's not a
Yeah,
bad
yeah,
thing,
that's
right?
correct.
If this entire hall
Yeah.
is blockchain, then this TDeFi stand is cryptocurrency. Blockchain technology is much larger than just cryptocurrency. Blockchain technology provides a level of innovation that was simply not there before. Now, the first application of blockchain on scale, it was Bitcoin.
Yeah.
And Bitcoin is still here. And blockchain applications are still here. The mere success of this ecosystem that we're seeing is not necessarily only driven by crypto. Yes, crypto is a very important part. But the technology that fuels all of that is blockchain. And blockchain is wider than just crypto. So when you're thinking about tracing your food from farm to fork, can you do that with cryptocurrency? Not necessarily.
So maybe, Bhavin, what's your view on this?
Look, quite a variety of view, I would say.
We don't want
Firstly,
to go crypto versus blockchain, because we are at a panel of role of crypto adoption.
Let's
so
put it very
what's your
simple.
take?
Very simply, right? Every bank, every regulator recognizes that there is value in the technology, which is the distributed ledger technology, right? There is no doubt about it. From World Economic Forum to even the International Bank of Settlement, everyone has done white papers on this. So this technology is definitely useful for the future, and there are early adaptation in the finance world, highly recognized. No doubt about it. The question lies is in cryptocurrencies, or call it crypto assets, still remains a debate whether it is truly a currency or whether it's it's an asset. And the speed at which they are mushrooming every now and then, is it creation of a new bubble? That is the biggest question that still continues to lie in people's mind, right? And I'll put another angle to it. And I've said this many times at many events. The real Bitcoin was something that Satoshi Nakamoto said, he or she or they, whoever they are, said that in 2008 through a white paper, currency for a common man, currency against imperial capitalism. currency which gives you freedom to do the transaction without answering anyone and anybody anytime. Today, Bitcoin is not that. Today, Bitcoin has been the very coin which was supposed to be a common man's currency. How many common people here are using today it as a currency rather than as a means of investment instrument? So what has technically happened is that Bitcoin is already dead. What we now have is a version of imperialist capitalist Bitcoin investment instrument in which everyone is investing, and there is still a value because the value lies in the actual monetary value transfer from point A to point B seamlessly and without a cost or a minimal cost. That still exists, right? But the real currency value is already dead.
Why you say dead?
Because I share parts of his point of view.
At least I'm one. I would say I'm one witness that Bitcoin is not dead and it's working very well.
It is working, but see, he's not saying it's not working. He's saying as Satoshi Nakamoto envisioned it, which was...
I think it's working as Satoshi Nakamoto envisioned it, and we can have a debate on
I think this is a philosophical debate.
But it's not philosophical because I think we are using it. I think when you are sitting in UAE or when you are sitting in US or some of these markets where you have advanced payment systems, maybe you can say that, but go and take a look in Venezuela what happened in Argentina. Now everyone in Salvador, when it adopted it, you didn't have a basic payment infrastructure. And now the people are paying Bitcoin to pay their electricity bill.
So there are two parts to it. One is where there is no sophisticated infrastructure, this technology is able to penetrate. And hence, technology is absolutely well recognized across the world. No doubt about it. Coming to the Bitcoin per se, and the example of Venezuela or Argentina, we are talking about economies where the local currency was not strong enough and was really going through its struggle to remain strong in the wider global economy, and a replacement currency was needed. Typically in the past, that replacement currency has been US dollar. And what Bitcoin is able to do is, to some degree, in those emerging and struggling economies where their individual currencies are not strong, it is able to replace US dollars because now you don't have to print US dollars and ship. Bitcoin is much faster and easily accessible.
So Bitcoin is working. So Satoshi vision was working because obviously it was not built for the rich and powerful. It was built for those economy who are struggling. And
but where is it majorly used today? If I have to say, where majority of the Bitcoins lie today? In people's wallet for investments.
I'll add another data point. I'll add another data point here. So when you think about Bitcoin right now, would you assume that the majority of it sits with multiple different people and thousands and millions of people? That's the assumption, right?
No, I'm not assuming that.
All right, I'm seeing
assumption.
a lot of people nodding at me. I understand your point of view, right? Now, did you know that 5% of all wallets, only 5% of all wallets hold roughly about 95% of Bitcoin in circulation right now? So I don't disagree. By the way, Bitcoin has done many beautiful things for me. So, you know, I like it as a currency. But if you think about the angle that Satoshi put in the white paper, that it should be for the masses, that it should be used by everyone, that it should be accessible to everyone, that it should be easy to use and accessible and shared in the entire world, if I then consider that 5% of all wallets hold 95% of all value, it means that there's something wrong there. Does that mean that the concept itself has failed? No. It's just...
It is more about abuse and misuse of the concept by a select few. Right? And which is the unfortunate side.
We go back on a crypto, but just to the... I think that's how any technology progress, right? And that's what I think any technology goes slow and slowly over the time it adopts. Now coming back to the banks. So banks do have to play because today banks are the one who are the gatekeeper of today's financial ecosystem, right? I have nothing against the bank because I think as Cashaa, we are the biggest crypto-friendly banking platform in the world. So anywhere from Binance to Next, so they all are banking with us. So we do want to survive. We don't want the Bitcoin to kill us, but at the same time, also a very big believer of a decentralized and a free money.
Absolutely.
And that's why I have nothing for Bitcoin or nothing against Bitcoin. I'm against some of the banking practices which is today, because still banks exist from 500 years or maybe 600 years, but still you have a majority of population which is unbanked.
Correct.
So somehow, even after 600 years of history, something is missing. And I think Bitcoin just picked those missing and filling those gaps.
Look, spot on. Financial inclusion is one of the biggest issues we have in the world. And if you take the digital side out of it, in last 10 years, look at any data, we have actually gone back on financial inclusion rather than making any progress. 90% of financial inclusion progress in last 10 years globally is attributed to digital innovation, blockchain and cryptos being part of that revolution, right? So it is a very important part for inclusion for sure. And I think I also believe in this one. At the end of the day, if majority of the people would want to invest in Bitcoin for whatever rhyme or reason, or would want to transact in it, then I think our governance and our ecosystem has to adapt to it, right? There's only so much. I say it this way, when any technological innovation comes, the people who are already strong in that domain always resist. And I always believe you can delay an invention, you cannot just stop it,
That's
right?
true.
So we can perhaps say that regulators around the world will take time in adoption of cryptos. And I've said it many times, you can love them, you can hate cryptos. But eventually, we all will end up adopting it. There is no option to adoption.
Yeah, so from India, I remember a quote from Gandhi. Gandhi said this, that first they will ignore you, then they fight you, and then they accept you.
Exactly.
I think that's the principle which Gandhi used to get India freedom. So I think Bitcoin is just going through the same phase. We had the first they ignored, they said that the Bitcoin is mere, it's just a scammer's tool, then they started accepting it, recognizing it, and now today maybe in couple of years, we will have acceptance also.
And now history is starting to repeat. The other day, someone sent me this Jamie Dimon. Does everyone know who Jamie Dimon is? He's the CEO of JP Morgan, if I'm not mistaken. So a few years back, he actually came out and he said Bitcoin was one of the largest scams that we've seen in world history. And a few weeks after that, if not even in the same week, he opened a crypto desk for JP Morgan, right? And how do you know that we are actually moving forward in time? History has now started to repeat itself. JP Morgan again came out and said, oh, Bitcoin is a huge scam, drove the price down and started buying again, right? So
No, I think let's not bring JP Morgan because JP Morgan is one of our biggest partners.
No, that's
so
that's your problem, Cashaa. That's your problem.
Why? Because see, so I think that's people need to know. So all our US banking transaction actually goes through JP Morgan, and being the biggest provider for the crypto industry, I think somehow JP Morgan is contributing a lot. Now, what Jamie Dimon have his personal agenda, that's up to him. Let's keep
Haram,
JP
he's
Morgan out
protecting
of
his
it.
client. He
Everyone
wants to protect his client.
No, because we all want to fill our pockets, and and we can have our own things. So no, this is just a fact because some of the big companies we are banking, all the SWIFT transactions, I think we had yesterday Satwik here from UnoCoin. We had a CoinDCX, we had Kuber. All of their funds are there, and that's moved very smoothly by JP Morgan, knowing that they are some of the biggest crypto company in the India or in the world now. So that's something which I think people must take away. Not get into the personal agenda of individuals. Look into the technology. Let's see exactly how it's been functioned, because I think we all gonna sell you something which gonna benefit us. But I think every individual have to recognize that there is a value in the underlying technology. Absolutely. And today, as banks, as a financial institution, we started to understand this. Some of them, as an early adopter, like Santander, I had a very early day discussion, I think in EU Parliament, Santander, the VP Innovation, I don't remember the name.
A Scottish man, yeah.
So we had a panel and we were talking about, so Santander did a really, really
John
good
Walpert.
job.
John Walpert.
So John was there, and we both were in the Brussels discussing about that, how we can write the framework so that the banks can be more friendly with cryptocurrency. And one thing which came out of the discussion is that because as some of the oldest bank like Santander or RBS or when it go to JP Morgan or Bank of America, the problem is that two things which I understood from my own experience. First, for the big banks, the risk versus reward is not clear, which makes sense. I think if we take the examples of HSBC of the world, we know what is the risk versus reward. In a simple term, how much business you can do minus how much fine you can pay equal to the profit. I will not more open than that. The second is, do we have enough transaction monitoring or AML tool with the infrastructure, with the banks themselves to recognize this?
Add one more thing, Gaurav. There is also an issue of market surveillance. In any open trade market, right, when you have a securities market, commodities market, there's always some form of a surveillance, right? And there is this underlying belief that the technology is strong enough to do the surveillance. Having said that, there has been a number of recent incidences where it is believed that crypto markets were manipulated artificially, right? So the surveillance is the other part which is providing the risk. But coming to banks' adaptation, there is a very simple, basic, fundamental issue. Any retail client strongly believes that if I put my money in bank, it is safe, right? And you look at any banks, what does banks majority of the time when they fight cases with their clients are all about, right? These are typically about investor invested in a structured product, some guy invested in an insurance scheme, some guy invested in some investment or script without understanding the real risk behind them, and eventually decides to go and sue his bank, right? And banks keeps on fighting with that customer, saying that, look, you signed the paper, you invested, why are you blaming me? This is the fundamental issue with Bitcoins and cryptos as well. Because banks fear that individuals will go in the rally and one day come and sue them.
I think you're right, gentlemen, both of you. But see, we said AML, we said lawsuits. Let's step out, zoom out of this one level up. There's a more fundamental issue. Identity in itself is broken, right? I can pull out an ID, both of them, a UAE ID, both of them issued here in the UAE, that have two different spellings of my name, right? So identity itself is broken, and this is not a conversation that we need to argue about anymore. Hundreds of millions of dollars are lost day by day through data breaches. Now, on top of that, which is even more fundamental, every time you go to open a bank account, there's something called a KYC, Know Your Customer. Know Your Customer itself, the technology as it stands widespread adopted today, is also broken, right? So at least with cryptocurrencies, we have a public ledger that is available to everyone, that everyone can access, that maybe in the future we can actually build real identity, real KYC on top. But the real problem, the underlying problem, is not necessarily that the bank doesn't understand it or they don't know what to do with it. They're trying to put it in these broken systems without accepting that they're already broken. Identity is already broken. AML and KYC, as we're knowing, is broken. Else it wouldn't be a $100 billion industry for 100 different players to play in. Then we would know there's one supplier of AML and KYC and everyone follows the same standard. Unfortunately, that's not the case. So at least with cryptocurrencies, we have a chance that maybe in the future, it could be better. And the banks that understand that are already developing competitive advantages from that. They're opening themselves up in regards of trade finance. They're opening themselves up for transparency of their bond creation. They're opening themselves up for transparency around the loan process. And more banks are jumping on this bandwagon. And like you said, once we arrive at that critical mass, only then will we see real adoption. But there are good signs already.
Oh, yeah. So I think a lot of banks have started experimenting. I think one of the technology, I think Ripple have done a great job educating banks, or at least it's working, right? Okay. I think Ripple have done quite a job educating banks about crypto, about distributed ledger technology. So Bhavin, when you talk to the regulator or the banks here, what's their take? Are they up to the speed? Or
again, they all believe in the technology, right?
They all believe.
Even in this region, we had Central Bank of UAE and SAMA doing a proper experimentation on transferring a digital currency from one central bank to another central bank. So people are experimenting, regulators are adapting, right? I did a paper for DFSA a few years back on adoption of digital assets. What does digital asset means? What does custody of digital asset mean? So regulators definitely know this is the future. It's just about going towards the future in a conscious and cautious way rather than rushing towards it, right? That's the delta.
And to add to your point, we live in a country that has a very progressive regulator. So today, just the other day, the Emirates Security Exchange Commission, they issued a white paper and a draft regulation and draft laws for people like us that work in this industry to follow, right? So slowly but surely, we are seeing the regulators, particularly in countries like the UAE, Saudi Arabia, Bahrain, slowly but surely adopting these regulations. And to anyone that's interested in what Bhavin said, this is a very unique project that we've seen here in the region. It's called Project Aber, ABER, between Saudi Arabia and the UAE. An impressive feat of central bank digital currencies that really is a standard for everyone. And also, I can't let you sit here and support Ripple, please. I can't let you, JP Morgan and Ripple, that's just, you're going places. I would go head to head with you. But for all intents and purposes, I really appreciate this conversation. Thank you very much.
So I think with this, I think we had we come to the end of the panel. Yeah, so we will just open it for the audience if they have any question.
Hello, hello. It was a brilliant discussion. I mean, this was one of the best panel discussions we had on this stage. Thank you so much for all the esteemed panelists for that. CBDCs apparently have been called as the forefront of saying that banks are adopting crypto. Is this true? I mean, this is a question to all three of you. All three of you come from experienced fintech industry. So what do you think? Is CBDCs a real indication that banks are now on the way of adopting crypto?
So when we talk about CBDCs, I think that's not for the banks. I think the first layer goes to the central banks. And central bank and banks are complete two different entities. I think here we were talking about more about the banks, which is more the commercial and retail banks. Definitely CBDCs is the great technology, and that's what Bhavin was also mentioning, that I think we need more transparent system. If a country is printing billions of dollars, because today we live in a digital economy where every country is connected. An economy of one country can actually affect its neighbors. But today we are living in these silo systems which don't talk to each other. And Bhavin just took an example of a broken system of KYC. So I think CBDC, one, at least at the fundamental level, what they can do is to bring that transparency within the nation states, that how the currency has been produced, circulated, and held. And maybe I will let the Bhavin add.
Short answer, CBDC is probably the most promising adaptation of digital currencies today's seen, where probably nations, countries, Ministry of Finance and central banks would potentially adopt. Some countries faster than the other. But in a very layman's language, currency can be broken down into 4 parts. There is actual money in circulation that we see, which is on the books of accounts of the country, balance of payments, right? Monetary fiscal policy. That gets divided into multiple parts. The actual currency in circulation, which is in form of notes. This is typically 7% globally. Then there is e-money, money that sits in your bank accounts as a ledger entry. It's not physical. Then comes another thing called e-currency. A lot of countries are moving in Africa towards e-currency, which is not on DLT technology, but a digital currency, right? And then comes CBDCs. CBDCs are currently considered most safest possible adaptation, and many countries are experimenting towards CBDC. E-Corona is a very good example of that.
I agree with everything you said, but I want to add one dark side of CBDCs. I also agree with the fact that, yes, it is a good innovation and we will see it. But think about this. Think about a place where we have a real central bank digital currency. What we're seeing right now in China rolled out, there's 500,000 people using their e-digital currency today, their CBDC today. Now, think about this. The money that I have in my pocket, you would have to fight me to take it out of my pocket. The CBDC in my wallet You press a button, and it's not with me anymore, right? So there is a real
Look,
risk.
it's the same with your bank account.
You're right, which is why I said cash money.
And that's
said
why I
cash
keep
money.
talking about use Bitcoin.
Yeah, right. So you know, it's not all gold that glamours. There's a real opportunity that we have with cryptocurrencies, with CBDCs, with blockchain. But you know, it's not the answer to everything. Thank you.
No, but I think
I have
there
to
is
run.
a little gap here in the CBDC.
I'm in another
Okay.
panel, please.
Okay, please. So I'll just so we will just conclude this panel. If you have more questions, you can find the speakers around, and we will take this off the session. Okay. Thank you so much.
I really enjoyed this.
Yeah.
Thank you, guys.
Perfect.
Thank you. Thank you all.